Hello traders, Gary Wagner with the Gold Forecast. It is Monday, approximately 9:30 a.m. in Honolulu, Hawaii. It is the 7th day of February, and this is the Daily Report. Gold, in extremely quiet activity, is currently trading up about 20 cents. It's been up $1 to down $1 most of the trading session. It's kind of looking to find a spot that it's comfortable with, and has been currently eking higher, as I said, currently up about 30 cents. We are looking at a very, very short term. This is a 3-minute Henkin chart. Just to give you an idea of the smallness of the range, here we, as you can see, it tested some lows. This is down at 1347, and it had some highs right up about 51 right in here. But what I am finding interesting is, once again, as this market moves around, what we are noticing is we are getting the range to narrow, and it is beginning once again to compress and form a pennant formation. If we turn this into a 15-minute chart, as you can see here, we are looking at the breakout that we saw after we did get that compression. And then, as I say, this is much smaller. This is a lot more minor, I think, than that breakout that we had before. But as you can see, these ranges are compressing. And whenever we see that happen, it is something that we do want to take note. Because behind the theory of a pennant formation is the fact that as these ranges compress, energy builds. When it hits the apex of that pennant formation, that energy is released, and it's released either by the market moving strongly higher or strongly lower. My sentiment is this is much less of a range. If we take a look at the absolute range, we're looking at about 1358 on the high, and on the low 44. So there's not a tremendous range, but that range is absolutely tightening. It is something we want to pay some attention to. Traders, this is our daily chart that we are looking at in candlestick format. You can see the activity over Sunday as well as today, and you can see really how quiet that range is. Let me get a logical highlighter here, and that is really in this area here. We are running into a small rally right now, currently trading up between $1 and $2 higher, and you can see that by looking at this very small bodied candle here. Of course, after breaking out of the range which we have had, the market had been absolutely range bound, and the best way to look at that really is when we look at this activity right in here. What we get is that set of alternating candles, and the alternating red and black is really what I look for when I'm looking for a market that is range bound, is trading in a defined range, and has not yet broken out either to the upside or downside. That's quite clear. Of course, that all changed the other day when this market really broke above that range. Now, as long as this market can trade above the highs of these prior candles, that should form some good support. My personal feeling right now is that we are forming a new base in gold before it will take off. My belief is to the upside. And really for today, this is the last chart that I do want to take a look at. This is our daily Henkin with our Elliott wave. And as I blow this up, you will see in terms of the Henkin candles themselves, they have been growing in size. Of course, this candle, this last candle here, is still forming, but we can see we had an abundance and pretty much straight red candles all the way down on this last small, this minor C wave. When we hit the bottom, and our belief was that bottom was at 1308, when we hit the bottom, as you can see, the market has been moving off of this one channel line and has been moving higher. We've talked about our expectations in terms of where we think this market could in fact go. This is that band that we're looking at between 1364 and 1393. We want to, of course, if the market does in fact carry to those points, Pay very close attention to how it reacts both at that 50% level and the 75% level. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily review. Bye-bye.